Starting out in real estate investing can feel pretty overwhelming. There's a ton to figure out and you can get lost in the noise. But let me make it simple. A good first step is to narrow down your location sandbox. So in this video, let me show you how exactly we do it in Toronto using a very data-driven approach for smarter, fact-based decisions. It's not about speculation. It's about finding the best combination of rent yields and growth potential for solid returns. But before we dive in, if you find this video helpful, hit that like button, subscribe for more real estate investing tips, and if you want to chat one-on-one, you can always book a call with us. First off, finding areas with the best rent yields is actually the simple part. You take the average rent in a neighborhood and then you divide it by the market price of that neighborhood, and this can give you a clear sense of what areas are pulling in better rents and cash flows. In Toronto, you can easily pull this data from 𝘚𝙤𝙤 and compare neighborhoods this way. Of course, if you get a deal, your rent yields might outperform your average in the neighborhood, but you should still be looking at market rent yields for that neighborhood to get a better sense of things in general to see which areas have been outperforming. Do not skip the step. If you're not crunching your numbers, you're just guessing. Next, here is where it gets trickier: growth potential. Past appreciation is nice to look at, but it doesn't guarantee future growth. And if an area has already seen fast price increases, it could be actually past its peak. So what do? Well, we recommend focusing on areas with stable long-term growth, or better yet, spot areas with future growth potential based on this criteria. How do we spot these areas? Well, look for signs of transition. Think trendy cafes, co-working spaces, boutique shops. Toss in some government investments like new transit lines or public spaces, and you've got yourself a solid area to watch. Now, if you really want to dive into the numbers, look at areas where rents are rising faster. Now, why do we look at rents instead of property prices? Well, because rents do give you a better real-time picture of what's happening in the market. Property prices can be skewed by speculation, but rents reflect what people are actually willing to pay right now to live in that area. So if rents are climbing in an area, it ends up being a clearer sign that more people are looking to live there and that area is growing. Now that I've explained it, let's walk through our step-by-step approach. First, we look for cash flows, places where the property at least breaks even after covering the mortgage and operating expenses. And right now, that's at least a 5% cap rate. And to calculate this cap rate, we take the 𝘚𝙤𝙤 market rents, subtract operating expenses, and then divide that by the 𝘚𝙤𝙤 market value. And here on the screen, we ran these numbers for detached homes in October of 2024 in Toronto. Next, we check rent growth. Ideally, we're looking for at least average or better 5-year rent growth, and then we zero in on the top performers for the faster 2-year rent growth. Then you can layer in clues like new businesses, new condo projects, or public infrastructure projects, and boom, you've got solid areas to focus on. But remember, there's always the base effect to consider. Right now, we ran this data for October of 2024, but it could be skewed because it's just based on one data point. To get more reliable results, it's always best to run the numbers for several dates and average them out. But at the end of the day, here is the hard truth. Finding the right neighborhood is part science, part art, and sometimes part luck with the right deal. Realistically, Toronto is a strong market overall, so once you narrow down your sandbox, the next best question might be to think about what to invest in, because the property type definitely matters. Houses with multiple units typically offer better rent yields and more opportunities for value add. What about condos? Not so much. They've been hit a lot harder with a lot more new supply, and the demand isn't there because the cash flows don't work for investors. Houses, on the other hand, attract both end users and investors, and once you add a more stable market with better rent yields, you end up with better long-term return potential. And if you want help with finding the best real estate investment opportunities for you, let's chat. We're not just another real estate sales brokerage. We're experienced real estate investors in Toronto, especially when it comes to multiplexes. Whether you want to buy a property that's ready to rent out or you want to convert one into multiple units, we can help. Here's what it's like to work with us. We'll take the time to understand your goals, help you find great investment opportunities using numbers, and eventually help you buy the best option for you. If you need renovations, we can connect you to trusted contractors as you manage your project, and we'll be around to coach you along the way. Once it's done, we can lease and manage the property for you too. If you're ready to get started, just head over to this link here and let's chat.